And this is your daily recap of what happened in the markets. You will find here the topics referring to the stocks, commodities, cryptos, and economy as a whole. I'm very glad you decided to pop in. Today we are just going through the elements that happened lately. So I hope everything will find something for you. That will be about debt ceiling, about the state of economy from east to west globally, and right after we'll jump to some analysis regarding crypto and macro events that are upon this week. So also we ended up with trade ideas. So let's get started. And economy view is obviously our first block of Blockrevision, and we are going macro from here. So mixed data around the globe, we can find that China is rebounding in terms of retail sales, and that's what the consensus estimation are telling us. So retail sales is about to boom in the second half of a year, but that doesn't reflect the boom in United States. Yes, it's recovering slowly, but such elements as unemployment market may spark an alarm right here, as where we are right now at that recent elements that may bring us some concern is this rebound from the cyclical low that usually it suggested a recession. I mean the rebound in terms of labor market. So we've hit that trough, and right now this this reaction in the polarized direction may bring some concern of analysts. So in Chinese consumers alone, the labor market shows kind of a resilience, but we can find that the strength of a market globally is right now polarized to the east in terms of the this strength and persistence, even in obtaining us with better data in relation to what is going on, whether it's in European Union or United States. So that's exactly what I wanted to point. This divergence may bring some possibilities of flowing that money from east to west and making the American market more, I would say, more interesting in terms of the valuations upon this year. But still, even though we've seen the rebound in the market, it's like a relief rally rather than something that may bring over much more persistent price action. So it's yet to prove. And that limit was reached in January this year, but due to an extraordinary measure taken by the Treasury Department, the money is supposed to suffice until the contractual date of June 1st. And on the Treasury Department website, we can read that the debt limit has been raised 78 times since 1960, and it was around 90 times in the 20th century. So I would say that US, even though it was close to bankruptcy in 2011, even closer than right now, just merely the ratings on Moody's has been lowered. So it's nothing really happened. It's just much of a noise around the topic that may eventually lead to no really serious outcomes. But if it did, Zillow, the company, the housing company, estimates that the cost of housing due to increasing rates on loans with 30-year rates above 8% may show that there might be a potential very large drop of over 20% if that threats will materialize. So there is much to save, and I would say that the governors won't sacrifice the economy to that extent, and they will raise that limit once again. And that's a kind of interesting finding out of the economy. Phillips curve, that's an economic theory that inflation and unemployment have a stable and inverse relationship right now, showing that due to digitization, these factors may dissipate and may eventually this section. So this section may be followed by lowering employment and also rising getting into this more artificial intelligence type of works. So we may find that inflation may drop even though the employment may get stable or even rise a bit. So that's the concept of the Phillips curve that may this time get disproven due to the circumstances that right now we are facing. And even the deglobalization scenario where trade intensity falls substantially may not really bring that back, this Phillips curve to the one that may backtrack its trajectory to the core of the idea. So that's what I wanted to point out. Whether Phillips curve will survive the cycle of this turn of AI, turn companies to AI, it's yet to be proved, but it will be kind of interesting to watch, and it may even become a foundation to rebuild some physics around the economy. So right now we are jumping to market outlook, and let's find out what's going on SPY. So SPY is still in a horizontal trend, but is kind of in a imminent phase of a breakout. But we need a spark higher, maybe followed by some better earnings upon this month. So for now, there is no catalyst that may push the valuation forward, and when there is no catalyst, we need to just remain patient and just hang on to and keeping not position at all at best. So some other may say that it's a kind of a diamond pattern where usually it's a harbinger of a reversal, but for now there are too few data, and we would need a bit more type of a price reaction within the formation in order to qualify this. As such, as also we don't have a very much of a spark downside with a weak having a closing right beneath the structure. That's why there is for now not many signs of forming such of a diamond pattern. For now, I'm just treating this as a type of a consolidation pattern after this rise in March and April. For now, however, let's find out about US 100, and QQQ is the one to study for me. So QQQ right now is trying to reach new highs, but the price action is not very satisfactory. However, we are still fighting for that to happen. So in order to achieve that recent highs of August of 2022, there is still yet 1.93% of gain to catch up. So for now, QQQ is uncertain. It should move higher unless anything happen to the global outlook. Right now, let's find out what we have next. Crypto symmetry. That's out of the crypto outlook. So there is a finding where over 2,000 crypto coins that beat the bust. We were the witnesses of over 2,000 crypto coins that beat the dust between 2013 and 2022. The problems around the topics were mainly lack of adoption and use case, poorly designed or implemented projects, and also some of the scams and fraudulent elements that also sparked such problems. So my appeal is for you that you better just study to your best knowledge those white papers or any other type of elements regarding whether the quality of a crypto project is right or wrong. And also by studying the history, you may find the right tips on whether to invest or not invest the money, as there is a much higher percentage of probability that you will lose money than gain. That's why you need to have an edge on the market. That's why you need to be prepared. That's why in order to get that profit, you need to be better than the majority of crypto market participants. So that's the one of the finding. Right now, let's jump to market movers, and we have right here UK's GDP still at risk. So United Kingdom was expected to be the only G7 country to fall into recession in 2023. Right now, with those gauges been lowering but plateauing, those threats maybe are getting over, as a British company recently shown the data that justified an expansion of 0.2% year on year in the first quarter 2023. But it's lowering still, so it's nowhere from telling we are over. Right now, the Bank of England is increasing interest rates. That's why we might be still yet to go through a turmoil. And I would say that even though the euro area is getting over this inflation, possibly maybe in a slower pace than the US, but still remarkably, UK is still in a possible trap, as this inflation is still revolving around 10%. So you need to be very cautious in when trying to thinking of investments in that type of sector. Right here, China's factory gate inflation showing deflation, and that's very outstanding regarding other regions and in the world of top economies, and that means that after this Chinese economy been unfrozen by Xi Jinping, we have found that the market has really found a relief, and those selling pressure has reoccurred. And right now, that's why this type of tendencies are strictly reversed to other economies. Earnings that we were watching was Walt Disney and Roblox. Walt Disney has suffered the lower gauges of new users inflow, whereas Roblox reported its Q1 results missing earnings estimates, and the metaverse investing theme may be yet premature to play in my view, but anyway, there is a much more for the company to develop during current circumstances, even though the interest rates may not really entail such of an interest around, at least for now. And what's yet to deliver, we have Catalan, also the Home Depot on Tuesday. On Wednesday, we have Target and Cisco. Thursday, Alibaba Group, and Friday, John Deere and D-Wave. So those are mostly the strongest names to watch this week. So as you can find, there are not maybe much of a red letter days in terms of earnings reports, but definitely some to watch for traders and investors. Right here, we will find economic calendar for this week, and let's find out what we have right here. We have industrial production out of China, RBA meeting minutes from Australia, economic sentiment out of Germany, and retail sales from US. So it will be very interesting to watch after this Chinese spark higher, whether retail sales in US may catch up. GDP growth rate of China and building permits of US, and alongside we have inflation rate out of Japan, and Friday's right there with Fed Chair Powell speech. So those are the names of events to watch, and as before we call a day, there is a last one thing of trade idea. Trade idea section is the one when we study technical side of a particular asset, and for me today very interesting to study is Uber. Uber recently has been in this up mode after earnings, and right now we have hit a possible ceiling at around 38.7, and 39 has been one that right now is stopping us from rising. However, we need a kind of a proof that may show us that the inflection of this exponential move take place. For now, we do find that we are finding a bottom right at the previous lows, and it's very likely we will just try to stop at somewhere between 38.9, where I do expect this price action will push us to. Right after, I do expect we'll make and once again justify those lows of 4th of May, and as we are just right here have built a kind of a double top formation. The one of the highs that haven't been yet tested twice is this 38.96. That's where I do expect this short position should take place and bring some lucrative results. So for me, this type of a trade should be one to consider with 4.8 points of risk reward ratio. So it's kind of a decent type of a probability And right here, if we just want to reconsider of where the entrance may take place, it will be within this box surrounded by 38.85 and 38.97. So, as always, remember about being cautious when trading or investing. Don't really risk more than you afford to lose. Sorry, and as always, if this plan won't materialize, if it won't conceptualize, and I would rather just look for another opportunity than trying to make a revenge on this trade. That's why. That's just my idea, not a investment advice. And that's it in today's episode. Hope you enjoyed. If you did, just write this in a comment or give it a like. So thank you very much. And